Well, let's stay with the story with regards to the state of the economy. FMCG companies, consumer durable makers, retailers are expecting a boost in sales during the election months. Several companies are working to step up distribution and promotional activities in this period. But will it result in increase in on-ground consumption? Historical data predicts otherwise. Priya Sheth has done an analysis on election and consumption, and she's here with all of the details. Priya, over to you.
Well, absolutely. Several FMCG as well as consumer durable companies that we've spoken to are saying that demand at this point in time may be soft or stable as we speak, but going forward, they are expecting a significant uptake going to the elections. Now, several companies are already working their way towards it. They're investing in several promotional activities. They're increasing the kind of investment on scaling up distribution, and they're also revising their SKU mix to ensure that the smallest pack sizes are available to voters when they go out to vote on election days. But of course, we did some sort of analysis with regards to the last two election periods of 2009 as well as 2014 and identified the kind of consumption trends, how they shaped up at that point in time. In fact, data from the Cantor World panel shows that the FMCG industry, excluding the atta category, saw volume growth of about 2.8% year-on-year in the year of 2009. Now, the atta category saw a growth of about 9.6%. But if you look at the top three growth categories, they include shampoos, hair colors, as well as noodles. Even ready to cook saw a significant growth at that point in time. But of course, the growth in 2009 was a combination of increasing population as well as consumption. Now, 2014, on the other hand, we saw FMCG volume grow about 2.5% year-on-year. This is, of course, excluding the atta category. The atta category saw a 0.6% growth owing to a weak harvest. But of course, average consumption dipped marginally year-on-year. It cannot be attributed to the election. But of course, the top three categories as far as 2014 is concerned, that's the April-May period of 2014, included glucose, noodles, as well as sanitary products. So therefore, when we look at the correlation that election has on consumption levels, there was really no such impact as far as in-home purchases are concerned. So it will be interesting to see how the season ahead shapes up. But historical data predicts that increasing activities as well as demand scenarios does not result in an increase in in-home consumption.
I remember having a conversation with Mr. Sanjeev Mehta. He would know a thing or two about consumption. Exactly that. That is an entire experience. Typically, pre-election is not sort of associated with a huge bump up in sales volumes for consumer companies. But anyway, Priya, thank you so much for setting that context for us. Let's take this conversation forward. We have with us Sadashiv Nayak, CEO of Big Bazaar, as well as Kamal Nandi, business head and executive vice president at Godrej Appliances. Gentlemen, thank you very much for joining in. The state of the economy is what we're trying to understand. So first things first, Mr. Nayak, if I could come to you, how do you view consumer trends shaping ahead of the elections? What is the demand like on ground in the stores?
So I think anything which creates buzz in the country has always helped modern retail, helped Big Bazaar, helped many of our formats. I see election in the same space. I think it gets families together, it gets everyone together. I would say, along with the election, there's one more significant thing happening in the next quarter is really IPL. So I think anything which creates buzz for us is good. Consumption definitely tends to pick up. There are more occasions getting created. Our fashion and our snacking business goes into a very, very positive space, upward of double-digit growth. So I think overall, anything which is creates buzz is good for us.
Okay, so buzz is good, and we'll have plenty of that as the next couple of months roll by for sure. Mr. Nandi, let's come to you as well. As we are entering this period, I mean, do you concur that generally there'll be perhaps the buzz itself is going to lift volumes, or will we require something more concrete on ground?
So, specifically for our industry of appliances, I think more than election, the weather plays a big role. And we are expecting a good summer this year. And I'm sure that is going to definitely boost consumption in a big way. Though delayed, but I think it will be a elongated summer and the temperatures are expected to be pretty high. So we definitely expect very high consumption of cooling categories this summer.
Okay. Mr. Nayak, just coming to you, because, we've seen a slowdown in the auto space of late. It's visible in the inventory data. Based on that context, how do you see spending shaping up? Are people spending less overall?
So we are seeing a very, very buoyant spending pattern, especially in the food, daily necessities and the grocery space. The fashion spending also is extremely robust with categories like kids apparel growing upwards of 25%. So overall, we are seeing a very, very positive space. There are certain categories like durables, which could have been better, but even there, I think we have nothing to complain. I think customers have been blessing us with good sales. I see a very different pattern. I think when you look at things like small towns and certain suburbs of cities, I think they're discovering a new normal, a new high. And frankly, we've stopped looking at growth numbers there. It's really defining a new pattern, a new high which we are going to achieve. So overall, a very, very positive pattern. We are not experiencing any kind of headwinds otherwise.
Mr. Nandi, you know, the kind of feedback that we've picked up is that the consumer durable space has seen a bit of a slowdown. For example, even last year was a bit sluggish. Do you expect it to persist, and where are we in the cycle?
So there has been slowdown, and largely that we have seen in the last 1 year because of the weather not being okay for us. At the same time, I think there has been a little bit of uncertainty in terms of the overall economy. There were prices going up, and that has impacted a lot of purchase sentiments. But I think going forward, clearly we see the sentiments to improve, to be more positive. Given that the way the whole equations are panning out in the economy, I think there will be more positivity, and that should drive higher consumption. And also, I think this year all projections are that the weather will be good, the temperatures will be high, so cooling consumption will go up for sure.
Okay. Mr. Nayak, just want to try and understand preferences as well. Are we seeing a shift from unbranded to branded and from unorganized to organized retail, specifically in some of these tier 2, tier 3 cities that you spoke of, where a lot of demand is emerging? This whole GST shift, is it helping organized players and organized brands more?
So I think we are seeing two things. One, there were certain categories like footwear, dining wear, serving wear, where there's definitely a move from the unorganized to the organized. We're witnessing that. But more importantly, if you look at our own brands, be it in the apparel space or in the food space, Future Group has a lot of our own brands. I think we are customers asking us for something which is of interest, something which is changing freshness almost at a periodicity of 3 to 4 months, and something where they can experience something new. Whether it is a body wash at one end, whether it is nightwear, or whether it is a new kind of a sipping bottle for my exercise regime. I think we're experiencing people coming and pushing us for certain newness and a certain freshness. The period for freshness is now almost come down to 3 to 4 months, and fortunately I think that push has given us enough momentum to go and change ourselves to make sure that we encash on the opportunity.
Okay, sure. Looking ahead into FY20, what kind of expansion plans are you probably working for when it comes to Big Bazaar?
So we've always been buoyant in terms of planning around 25 to 30 new Big Bazaars. But for various reasons, we end up opening around 20, 21, 22 Big Bazaars. So that's going to be a common theme, I think, going forward for the next 5 years. What's more interesting is two things happening. We are now witnessing many cities where we're opening the second Big Bazaar or the third Big Bazaar, and we're seeing business happen. So if I were to give an example of Nagpur, if I give an example of Bhubaneswar, we are now almost 5 Big Bazaars in each of these cities, and all of them seem to be doing very well. Interestingly, we are opening a lot of small towns, which possibly when I speak to some of my colleagues and partners in the FMCG space, they kind of tend to look at it as a very small town, but we are witnessing a very, very different trajectory there. I can give you an example of Gorakhpur, I can give you an example of Agartala, I can give you an example of Tirunelveli down south. I think they are experiencing a very different growth trajectory. So our expansion today is roughly 30% in cities where already there was a Big Bazaar and we have multiple catchments now, but 70% in newer towns, newer catchments, which are going to be a very, very interesting space to watch out in the next few years.
Mr. Nandi, what kind of growth rates can we see in FY20, and how much of this is probably going to come from smaller towns and the rural space?
So I think overall as an industry we expect a double-digit growth in FY20. This year, last 2 years have been in single digit, about 5 to 7. We definitely foresee about 10 to 12% growth in the industry. Again, our expectation is more growth from the rural market than the urban market because of, I think, all the schemes government is putting in place for increasing the overall earnings and of the farmers. I think more disposable income will be there. Also tier 2, tier 3, tier 4, as affordability is going up and with aspirations more or less same as the urban market, I think they will be consuming much more than the urban market. So clearly signs are seen. If you see FY18, we have seen slight tilt towards the rural and the upcountry market for consumption. We will see more happening in the year FY20. So very clearly I can foresee, if 10 to 12 is the average, about 15 plus coming from the rural and tier 2 market, tier 2, tier 3 markets, and about anywhere between 8 to 10 coming from the urban market.
Okay, so those are kind of growth numbers you're looking at. But Mr. Nayak, is that growth going to come after some big ticket discounting? I mean, are discounts the order of the day? What's happening with pricing? What should one expect here as we get into elections?
So I can talk of Big Bazaar. I think we always worked on the mantra to say we are always sasta. I think the whole idea was to have a price which is known in the market and we be the leading price. So frankly, for us, these short-term jumps and leads have not mattered. I think we always worked very hard on making sure that people see us an affordable destination around 365 days. I think it comes out of the fact that we are in multiple categories. For us, we do have occasions where we create tactical bursts of pricing just to get a new customer, but otherwise the whole mantra for Big Bazaar is to say make sure that you're affordable all 365 days and you really work hard on bringing down prices all 365 days. So frankly, for us, there's not been a major shift when it comes to a particular event which is happening in the country.
Okay, before we wrap up this conversation, Mr. Nandi, do you expect there to be some price revisions going forward?
So I don't foresee a price revision going forward because we are clearly seeing indications that the dollar is, not strengthening, rather rupee is appreciating, and we are also not seeing too much of, hardening of commodity, and as a result, I don't see a challenge of price in the coming months. But prices overall, there could be high because I think if you look at the whole changeover of, the whole fixed speed to variable speed in case of air conditioners, so the technology has shifted from a variable to a fixed. So inverter technology is becoming more and more, in demand, and that is going to increase overall ticket price in the marketplace because inverters in generally are an expensive technology. So that could take up the overall price, but a like-to-like, if you see vis-a-vis last year, I don't see prices going up. But the mix of premium, the mix of inverter technology could drive the overall ticket size in the industry.
Okay, got it. So that's a little bit like the BS6 transition. Since you're just moving to a different sort of wave of technology in individual products, that's why products could just get more costly. Got the gist. Thank you very much, gentlemen, for being with us and helping us understand the state of the economy and the mind of the Indian consumer. On that note, we'll move on and get some F&O trading ideas going. Krish Subramaniam of Altamount Capital is with us. Quiet day on the street so far, Krish. What trades are you going with?
Yes, Urbi, I think we have had a terrific rally in March so far, but I think we could see some modest correction going into expiry. So keeping that in mind and consider the fact that technically it's a bit overbought. So one could possibly do a bear spread, buy 11,500 strike put and sell at 11,300 strike put. So the net cost comes to about 48 bips. So the maximum gains would be about 152 bips, and one could also recommend a stop loss of 24 bips. And on stock-specific side, the metals have been languishing for some time. So recommending a selling of a Tata Steel futures for a possible target of 508. Also recommend a stop loss of 522. And the last one is buying of a plain vanilla, buying of a put, 390 strike put in ICICI Bank. I think seen some very terrific rally, but some correction could be around the corner. So that's quoting it around 450, keeping a target of 850 to 9 rupees, and also suggest a stop loss of 2 rupees.
Okay, all right, Trish. On that note, we're going to wrap it up. Thanks very much for joining in. It's also a wrap on Trading Hours. Stay tuned. Halftime report just after a short break.